There is a lot of money to be made in housing, and not just for real estate developers and homeowners. The people providing loans to buy those make a lot of money too. In this video, we'll explain how the housing market is getting just a bit bubbly again. Hello and welcome to the channel. Back in 2008, a lot of bad things happened. Banks learned lessons from it, which included higher interest rates for home loans and more selective lending. For example, it may be harder to finance a second home. And it may be challenging to find a bank willing to lend you money, if you are self-employed. Why that may be, is because there is a long chain when it comes to lending money to people to buy a house. What happens up and down that chain impacts how easy or hard it is for you to get a loan. For example, more recently, the investment banks are getting involved again. You see, the bank which gave you the money to buy that house does not keep that loan with itself for the entire duration. It does not want to wait for the many years it'll take for you to repay the loan. They prefer to have their money back sooner, so that they can go and lend it to someone else. In the process they may earn a little less, then it is an acceptable trade-off. Fundamentally, they are in the business of originating loans rather than lending money. That is, they want to get paid to find the guy who is looking to finance his home purchase. That is the business they want to be in. But what happens to the loan? Who has it then? If I am the homeowner, who do I owe money to? In most cases, it is institutional investors with a lot of money like mutual funds or hedge funds or pension funds. In many cases, Freddie Mac or Fannie Mae will buy the loans from the originating housing finance company, pool it with other similar loans, and sell it onwards to the institutional investors. So Freddie pays the entire loan amount to the originating bank, along with a part of the interest component. And Freddie does this for many loans across the country. Once it has many such loans, it takes the whole bunch to someone who has a lot of money, usually an institutional investor. Many times, these investors are looking for ways to earn steady returns. Freddie tells these investors, look, I have these loans which pay regularly and at a higher rate than you'll earn if you put money into government bonds. And they are pretty secure too. They won't all go bad on you, and you'll earn a decent sum. Sometimes, investors like that argument and pay money to Freddie to take ownership of those loans. Now the money repaid by homeowners as EMI flows all the way to the big investor. This is a long chain and it entangles many financial intermediaries. In 2008, when the flow of EMI was disrupted, bad things happened due to the long length of this chain. So now, the financing companies and the big investors are more careful, as they do not want a repeat of 2008. One of the ways in which the investors are more careful is by involving the US government in the process. You see, Freddie Mac and Fannie Mae are government-sponsored entities. Which means that if things go bad, Uncle Sam's got your six. At least, that's what many people believe. Which is a good thing, because a lot of finance is many people sharing a common belief. Like their belief in the US government. In practical terms, large investors are more hesitant to buy loans from companies which are not Freddie Mac or Fannie Mae. However, things are changing, it seems. Here's WSJ reporting on this matter recently. Wall Street is diving back into the business of turning home loans into bonds, injecting new competition into a market long dominated by government-backed mortgage giants Fannie Mae and Freddie Mac. The so-called private label mortgage market, in which financial firms serve the middleman role of creating giant pools of loans and selling them to investors, had more than $42 billion of issuance in the second quarter. That is the most since the pandemic started, and almost the most for any quarter since the last financial crisis, according to Inside Mortgage Finance, an industry research firm. This market still made up a mere 4% of all mortgage bonds issued last quarter. Fannie Mae and Freddie Mac, which issue bonds that come with a federal guarantee that investors will get paid, remain the industry's dominant players. What can we say, other than that the times are changing, it seems. So that's it for this video. If you enjoyed it, please give a like and I'll see you in the next one.